Hey, happy Friday to you. Hope you had a great week. Mortgage rates hanging in there here this week. We had just a slight improvement on rates, and that's really from the announcement of Fannie Mae, Freddie Mac going to be purchasing 200 billion in mortgage-backed securities, and the duration that it's going to take to make these purchases and when they're going to start, we don't know that quite yet. But it will be really interesting to see what kind of impact that has on the market. The Fed has engaged in QE, quantitative easing, a bunch of different times over the last 16 18 years back to 2008, and that, when they're not only buying mortgage-backed securities but buying long-term bonds, helps to flatten out the yield curve and bring long-term rates down, including mortgage rates. And so, with this purchase being concentrated in mortgage-backed securities, we're expecting for that to have some improvement on mortgage rates when that begins. So that's very positive news. As rates stand right now, they're at a 3.5-year low. We've hit this point a couple other times over the last 3.5 years, but this time it feels like we're probably moving lower. So looking forward to seeing where things move from here. Now, this May, we're going to have a new Fed president, and that does not necessarily mean, though, that we're going to see a significant increase in Fed rate cuts. A lot of the big banks have adjusted their rate cut forecasts down for this year, 2026, with a lot of the big ones now forecasting in 1 or 0 Fed rate cuts in the second half of the year, which is interesting because you would assume that the administration is going to put in a Fed president who will be pro rate cut, and I think they will. But remember that the Fed is a body of 12 voting members for rate cuts. So you have to get a simple majority vote from those 12 members for the Fed to cut rates. So it's a committee that votes on these decisions. So just because you have a Fed president who is supportive of rate cuts does not mean that all the other voting members go along with it. So the reason that there would be less Fed rate cuts being predicted right now is that the economy is relatively strong. So if the economy is going to continue to hang in there and job growth stay steady, economic growth continue, that does not leave a lot of room for Fed cuts. But separate from mortgage rates, we're going to see mortgage rates hopefully improve on those purchases from Fannie and Freddie. Hope you have a great weekend. Look forward to talking with you soon.